Hello, my name is Del Jensen. This is a short video about entrepreneurism, investing, and how to get your best returns that you can get on businesses that you're interested in. And I'd like to start off by saying this is not a sales or a hype. I just want to be clear and concise as to what's going on with Hopmarks and what we're about, as well as a lot of the other businesses that we're starting with Hopmarks. So first off, I want to start with mentioning something I've noticed about businesses in general that doesn't quite make too much sense, and I think you'll agree. And that is that a lot of people interested in getting a loan, or when people look at companies to invest in, they look at the revenue pretty heavily. And it makes sense that the revenue is considered because, you know, that shows kind of the hold they have on a market. But it also doesn't in many senses, because just because you have revenue does not mean that you're going to be in a position to necessarily succeed. A lot of companies are in the negatives a lot of the time, even though the revenue is really high, and that is because they're having to pay more, you know, obviously, than what they're getting. And to me, that's a sign of weakness beyond revenue. It shows that their hold on their product, or their product line, where it is on the product phase, is in the decline, or they are not expanding. If you're not growing, you're sinking. And that's one of the biggest issues today for investors and companies and people who are looking to find something stable. Now, this is a pretty prominent issue, with the exception of a few companies that like to expand and grow continually. And you generally see those ones survive pretty good, like Walmart. There's a lot of food companies out there that like to expand their lines. But so what I would like to get to is where can you invest your funds the best? Now, it's not just in any particular one company, because, you know, again, they could fail. Those companies that are invested in multiple companies generally succeed better or more stable. You don't want to stick with any one company for too long. If they're on the incline, they're either going to saturate the market, or they're going to get out-competed. Other competitors are going to take over. Now, if they are successful enough to saturate the market, they're going to stop earning an increase, if that makes sense. Continual increase. The products are going to have some saturation, and the product lines, either they need to keep developing new products, or they're going to sink. And some companies, some book companies like EDUC, Usborne Books, they continue to come up with more books. A lot of other book companies do that as well. And they've gotten the idea down really well, in that they understand that they need to keep coming up with new products. And it's kind of obvious once they're done with the book, it's over. But this concept of rejuvenation is probably what I would like to hit home with this video. And not just rejuvenation, but hitting the right mark. Now, how do we do that? How would you hit the right mark? It's not as easy as it sounds. It takes a lot of research into the general playing field of society, new developments and products. We have focused a lot of our energy and thought and processes on discovering and to find out these niches and to lay claim to them. And, you know, I've started lots of businesses, from textbooks leasing, which was doing really well when I started it, to finding game money and selling the game money for real money online. There's been a lot of businesses I've started, but one thing that keeps reoccurring is the need to keep moving. Now, this does not mean that you need to move within a decade or maybe even a century, but it does mean that you need to keep your eye out to when the products or the service is going to be outdated. Now, that's what Hopmarks is about. We have moved from textbook leasing to Bitcoin mining, and now Bitcoin greenhouse operations. We're going to be moving our Bitcoin greenhouse operations to Chelan County where the power is really cheap, and we're going to have it so that the electricity is used doubly so, with two different types of businesses that are electricity intensive, and that is greenhouse farming. For over in Chelan, it's cheapest to use electricity for heating, and Bitcoin technology. And one thing I've noticed is that Bitcoin's machines, they generate as much heat as other electric heaters. Now, this goes to say that there's a lot of resources that that doesn't get used with these Bitcoin machines. And this has become quite a big problem because with all this extra heat, and all this, which is, I see opportunity with that heat, it's wasted. And I hate to see things that are waste. It's not just, profits, but, if you can use a resource instead of squander it or waste it, then you got to do it. So we're going to use the heat for the Bitcoin greenhouses. And there's other products or services that we're developing that's in the pipeline. We've actually fine-tuned already the EZR stocks, which analyzes the stock. It actually adapts. So it's kind of a unique system where EZRstocks.com, we have it so that it adapts to the environment of how the market's moving and changing. It may not adapt as quickly as, say, a human with fine-tuned changes in the day, but as a whole, as a market, it adapts really well and is a pretty safe bet. When it says it's going to go up, it almost always does. And so it's this kind of venturing that I've done all my life that I would like to present to you as a potential investor. I'm not guaranteeing anything. I'm not even saying that a business will succeed or necessarily, but I am saying that I have succeeded in the past. There's only been one business out of about 7 of mine that has earned a negative on the return. Now, notice I didn't mention how much revenue it earned. I only mentioned the percentage, and that is because that is the key point of what I invest in. It's not labor intensive, so capital earns it rejuvenates it, earns itself. And with everything I do, except for the greenhouses coming up, it's not labor intensive, and it generates a revenue such that it goes to work way beyond the average of any other company. And that is because we adapt to the different situations. We find the mark and then we hop to it, Hopmarks. We make sure that we stay ahead of the game and we're in the right game at the right time. In general, we make about 3 to 5% per month on each investment, and anything that goes beyond 5% we keep for developing new projects. We like to develop new projects because, again, if we sit on anything too long, we know it will be saturated or take it over, or it will be obsolete at some point in time. Or there's another project. Now, it may not even be obsolete, but let's say we've developed this Hopmarks Bitcoin with greenhouse technology, and it's developed to the point where we keep growing until we reach the point where the rate of growth of Hopmarks Bitcoin with greenhouses does not exceed another project, Project X, maybe EZR Stocks. Once EZR Stocks is safely earning more than the Hopmarks Bitcoin, we let the Hopmarks Bitcoin ride with what it's on, and we move our new funds over to EZR Stocks. And the reason why we do this hopping, is because it allows us to reach the greatest potential wealth that is available per project or as a whole. Now, this concept has been around for many years. It's with even with trading between nations. Let's say a nation A and nation B earn are producers of steel at, X cost. Say this nation produces steel more cost effective than this nation B, but nation B, compared to its other products it could work on, steel is the best for it. So let's say, even though this company is really good in this nation, nation A, this nation B still needs to produce steel to become the most profitable it can be, because if it switches to these other products, it won't do as well as, say, nation C for grains, or nation D for producing electronics. So it's important to keep the whole spectrum in mind, keep in mind the whole outlook of what your absolute potential is, and to exploit the greatest potential you have. So that's what Hopmarks is about. We exploit the greatest potential, greatest returns with the greatest safety that we can. We call it the RRR, risk-reward ratio, and we try to make sure that our risk-reward is as low as it can be. So the risk is, if it's really high, then our reward is really low, then we don't go into it. If our risk is moderate to low and our reward is really high, that's something you want to go into. And that's something everybody should be going into. I'm not just saying this for Hopmarks, it's for investors in general. And you always got to keep in mind that you got to keep looking at the different aspects, the different viewpoints, what the news, the media, the psychological, in other words, a point for each of the individuals who are going to be also investing into a certain project, and whether there's really something solid to that or not. And if it is a sound and solid idea, if it shows promise like the ones we go into, then get into it, and get into it early. If the team looks good, if everything looks good, invest in it. That's mainly what we do, and we do it with a proven team. I have a team that I work with online by design. They are very tech savvy. They develop websites and programming for custom built websites, and they are probably the best team anybody could have. So no stealing them from me. But you gotta keep in mind that without the right team and without the right concept, without the right follow through, you're gonna fail. And that's, obviously a given. But one thing that I haven't realized early on in my investing was the required need for capital. Who cares if you're earning 300% a year if you have no capital in it? So that's largely why I'm creating this video, is to allow you to increase your investments by 5% per month up to, no guarantees of course, 5% per month is what we cap it at, and then everything past that, we look and exploit other opportunities and get things situated over there, and then we put more funds into that and have it grow. So that's a summation of Hopmarks. If you have an interest in this kind of development, go ahead and subscribe. If you'd like to see how we're doing every month, I'll send out a monthly newsletter and let everybody know how we're doing. And also maybe mention some opportunities that I see out there that we're not going to take advantage of, or that I don't mind competition in, because well, there's a lot of growth that can be made out there, a lot of good that can be done too. So keep a lookout for opportunities, and if you want to mention to me some opportunities that you find, please do. I love to keep my mind open and explore in depth different opportunities that are there. So thanks for watching this video, and I hope you've learned a little bit about the economy and how things work for businesses and investing. You probably already knew most, if not all of it, I don't know, but I hope it was at least a little informational.